Scott Kimball, about half your portfolio is in corporate bonds. So what are the valuations like right now? Are you getting paid enough for your investment?
What we do with the BMO TCH Core Plus Bond Fund is utilize what we call a relative value approach. So we look through all the markets of fixed income, government, securitized, mortgage-backed securities, for example, and corporate bonds, investment grade, high yield, emerging market debt, and try to find the pockets of those particular markets where we're getting a little bit extra yield or hopefully a lot of extra yield relative to the amount of risk that we're taking. Corporate bonds over the past few months, in particular with a lot of the concerns about energy, commodities, global systemic things, China, have seen their yields back up despite the fact that treasuries are remaining quite low. They've actually gone down a bit more. So we're finding a lot of exceptional yields in the corporate bond market at rates that seem somewhat unimaginable compared to 12 or 24 months ago.
What about high yield? Do you own any high yield? And if so, what's your view of that market right now?
We do own some high yield. Our primary focus of late has been investment grade. There's been a lot of investment grade names that have been caught in the fallout of the volatility that are offering high yield type yields in the context of an investment grade rating.
And you mentioned the Fed. Talk about inflation. We saw inflation tick up in the January employment numbers, ticked a little bit down in February. Where do you see it?
We think that inflation is going to remain more or less in check at or below the Fed's 2% target. Our primary driver there is that wage inflation, while it has picked up, remains fairly stable and somewhat below long-term historical averages, combined with very low energy and commodity prices. All those things together give sort of a mixed picture of inflation, so we don't expect to see it accelerate too much.
All right, so with that in mind, what do you think the Fed's going to do, and where do you think the 10-year Treasury is going to be at the end of the year? I think it's around 1.8% right now.
Our base case and the way we position the BMO TCH Core Plus Bond Fund has been for a pretty benign, below expectation outcome from the Federal Reserve. At one point, we saw 4 or 5 increases as the market consensus. We've been expecting somewhere below that over the course of the year. Combine that with a pretty benign inflationary outlook, we don't see U.S. interest rates, particularly Treasury rates, moving much higher than they've been over the last 12 months.
All right, you also have about a third of your portfolio in mortgage-backed bonds. We have the spring selling season coming up in the housing market. What's your view of the housing sector right now?
Our positioning within our Core Plus Bond Fund has been to emphasize U.S. agency mortgage-backed securities. We think that the fundamentals of the housing market for the agency sectors looks pretty reasonable. We think the consumer is somewhat resurgent and has stabilized, and we actually like the liquidity and quality of those, so they give us opportunities to be tactical. So if we have mortgage-backed securities, we can sell them with very little market impact, excellent liquidity, and maybe find some other yieldy opportunities in, let's say, the corporate or high-yield sector.
All right, and then finally, speaking of liquidity, we've seen cuts on a number of bond trading desks here on Wall Street. Do you think this is going to affect liquidity if you need to get out of a position? Do you think you're going to be able to very easily?
We believe so. Our fund, the BMO TCH Core Plus Bond Fund, is about $1 billion. We can remain nimble but also execute at a very strong institutional level. What we've been able to do is find intermediaries on Wall Street. They may be some of the large names or some of the second-tier names in terms of size to help us connect with buyers and sellers, other managers on the other side where we're able to transact very freely in this marketplace.
All right. Well, thanks a lot, Scott.
Thank you for having me.
Thank you for watching The Street.